How to trade with an edge in a grind down market. Most traders can handle bull markets just fine. It's the slow grind down markets that really cause trouble. When the market drifts lower week after week, eating away at your account without the dramatic volatility spikes of a crash. That's why in this video, I'm going to show you how to trade with an edge, specifically in grind down markets. And before we dive in, let me just say this. One of the simplest ways I built protection into my own trading is through a system I created called the safe wheel. And if you've ever tried the traditional wheel strategy, you know how painful it can be when stocks keep grinding down. The losses pile up quickly. The safe wheel solves that problem by keeping the income side of the wheel, but also layering in protection against those slow grind down markets. I'm making the full safe wheel course available for free right now. So if you want to learn it, click the link in the description. Now let's break down what a grind down market actually is and how to trade it with an edge. Grind downs are interesting too. So there was one in 2016. Let's go back to there. So you remember this grind? I don't know if you remember this one, but this was 2016. You can see the market grinded down from about 44 days down about 13%. You could see that the VIX got up to about 28. So you can see the VIX didn't really pop too much. That's why this was a grind down here. This is early 2016. You can see here, this grind down kind of started, in October and made it all the way down to here. So let's see here. This grind down took place about 81 days, down 20%. And you can see the VIX was hanging out around 13 and spiked all the way to 35, just under 36. So not quite like a crash, right? The VIX just spiked not too high. It spiked a little bit, but not. This is a grind down here. This happened in the last 3 quarters of 2018. Then we had 2022, right? Just basically the whole year. Down all year. At one point down about 27%, you can see there. But the volatility never really got 36, 37. It never even broke 40 during this whole, 27% move down. So this is a grind down in 2022. Let's take a look at February of 2025. So here, kind of from here into this area, got a grind down. It was 41 days. You're down about 10.5%. But you can see that the volatility didn't really spike much, probably at 27 right into here. Really didn't even break 30. You grinded down here, then the crash occurred. But this is a grind down here starting in early March and ending in early April. So first I'm going to look at a very popular strategy. It's obviously popular based on this video here about making $176,000 with Leap's options trading strategy with a 91% win rate without watching the charts. And here's kind of the trade entry mechanics that I'm going to refer to, so we can take a look at how does this do with in a grind down market. Okay, let's go ahead and simulate that trade. So it's a QQQ, and we want to go 365 days out if we can. We can only go to 300, so we'll go to 300 rather than 500. And we'll look at the deltas. We'll go to 60. And we're going to buy about $25,000 worth because that's what he talked about in the video. Let's see if I do about 13 of those. You can see that's going to take up about 21,000. So a little more than that. Let's say 14, 22, say 15 of them. Okay, so 15, $24,435 worth. Let's commit this trade and see what it does. Just call it a leap because it's a long leap. And let's just see, go week by week into the grind down. How does it do? So a week later, your $25,000 is down 3,400. Week later, you're down 3,000. Week later, you're down 2,000. Here, you're at break even. Do you take it off? No, because the profit target is 2x, right? And now you're down 5,700. Now you're down 9,800 a week later. Now we're in October, down almost $13,000 on your $25,000, down 16,000 on your 25,000. Now we go into early November, down 14,000, down 15,000 in November. Now you're down 19,000, almost $20,000. It's been 77 days. You're down 18,000 a week later. Let's go into December, down 15,000 there, 18,000. I mean, you're down 20,000. You're basically down 80% on this position here that you put on, and you get the 91% win rate. But what if you're, allocating your capital 25,000, or you get it up to 50,000? Now you allocate your capital 50,000. Now you're down 80%. When do you take this off? When do you take a loss? If you like the win rates and how much money you're making in the bull markets and sideways markets and things like that, and you're not worried about the drawdowns, you're not worried about possibly drawing down 80%, then yeah, that high win rate is a good way to go. But if you're interested in a structure where you're selling premium, but you're also protected from grind down markets while you're selling premium, so you have an edge while you're protected. Let me get into SPX here in the trade that I would put on, which I call the PL5. So let's put this PL5 trade on the exact same day as the leap that I just showed. So what happens if we go down 1 week? Let's go down a week, see what's happening. So watch the delta. It's pretty neutral. Let's go another week. We're in September, nothing's really happening. We're up a little bit, but no big deal with this structure. But we're going to get into October here. Let's get into October now. Let's start to get into the grind down. So the grind down starts here after the 2nd of October. So the trades mature by about a month. And you can see the deltas get more and more negative as the trade matures. Also, this profit hump builds as the trade matures. So you can see here, this is T+0 line. The red line is 24 days. The gray line is 48 days. When it matures 48 days later, you can see how the profit hump would build to 72 days and then where it would be in 96 days. So this profit hump grows over time. There's not a lot of upside risk because the expiration line is right there. So you're pretty flat. You don't really have risk to the upside. There's slight risk, but down to the downside, look at this profit hump starting to form as the trade matures, and the deltas become more and more negative as the trade matures. So your risk is to the downside, but your risk becomes less and less as the trade matures. Let's get into the grind down and see what happens. Okay, you're not doing bad. You're protected here. Let's go into the next week. Okay, you're still up. You're right in the heart of you're getting closer to the heart of the profit hump. This is how you stay protected in a grind down with mature structures like this. Okay, you can see here you're moving, even further down, but you're still doing okay. Let's go to the next end of October. Okay, you're at break even. But look at as the trade matures. Now look at this profit hump though. It keeps growing higher and higher and higher. More room for profit. So as the trade matures, you've got much more room to make profits. So let's see what happens a week later. Now the profit hump's getting even higher, up $885. Now it moved. You can see it's up still. But look at that profit hump. Now the profit hump is really getting up there. Nice and juicy, right? So we started out here and then the market grinded down right into the profit hump. That's a structure that I like, right? Something that you can make money with in a grind down. And we can go further like we did with the other trade and see how it does. Look at that, up $2,400. You can see you're nice and healthy here. Let's see, good profit hump still. And you're still good. Now, obviously, you're here in this profit hump here. You're probably going to take your profits when you're kind of in the middle of it. But there's a lot of time. There's a lot of opportunity to make money with this structure because even in a grind down, look what happens when it matures. Now, if you have multiple structures on, ones that are more mature than others, so you could have this structure protecting other structures that might get hurt in a grind down if the grind down happen to an immature structure, right? So you're going to have mature structures that are good, the grind down's good for, and you're going to have immature structures maybe that the grind down's not as good for. That's how I handle a grind down market as I do it with mature structures with that profit hub coming grinding down into the profit. That is the way that I like to handle grind down markets and profit and have an edge when the market's grinding down. So, as you just saw, most strategies really struggle when the market grinds down. They bleed out slowly while traders wait for a rebound that may never come. And that's why having structures that build protection as they mature is so critical, and why grind down markets can actually become opportunities if you know how to handle them. And if you're looking for a simple way to start applying a simple hedge system in your own trading without having to master complex hedge structures right away, my safe wheel is the perfect place to begin. It takes the income side of the traditional wheel strategy, but adds built in protection specifically against the kind of grind down markets we covered in this video. And that means you're not exposed to the same risk that wipes out most wheel traders. Now, I've made the full Safe Wheel course for free for a limited time. So if you want to trade with a system that can handle grind down markets safely, check out the link in the description. Thanks for watching, and I'll see you in the next video.